Inflationary pressures are dissipating. The February number was more or less bang on what we expected, flat in the month and with a little bit of rounding variation, 2.4% over the year rather than 2.5%. So you're very much a story of inflation coming back to where we want it to be. And some of the detail around it was also very pleasing. Some of those stickier components, the housing related components, financial services, we're seeing inflation in them come down as well.
Recent data flows have been softer than the RBA's forecasts. Will it be tempted to cut the cash rate again next week?
Given how hawkish they were at the previous meeting, we absolutely do not expect them to do a back-to-back cut in April. In fact, I'm so confident that they will be keeping rates on hold next week that I will be in London and I would have to have dealt with any surprises, in the early hours of the London morning, which is when I'll be writing my post-RBA note. So that's how confident we are that they won't be cutting rates next week. But we do think that some of the data flow strengthens our expectation that there's another rate cut on the cards probably in May, because inflation is coming down as we expect, more so than as they expect, and wages growth, consumption growth, these are all shaping up to be just a shade weaker than what the RBA had expected, because their forecasts for both wages and consumption were quite above our own views and the views of many others in the private sector.
Putting aside the fact the RBA's next decision day is April Fool's Day, does the RBA prefer not to change the cash rate during election campaigns, which we may well be in by the start of next week?
In my experience, Kirsten, the RBA and any other central bank will do what they need to do in line with the mandates they've been given. If that means cutting rates or raising rates in an election campaign, they will do it. If they're not sure, they will wait. And so they will not be steered by that. But I think by the time we get to the May meeting, we will actually be out of election season, or very nearly so.
How worried should we be about core inflation spiking when energy rebates end in December?
Well, headline inflation will lift again at the end of the year, and that's something that everyone knows is going to happen. Of course, the budget announcements last night mean that lift in CPI inflation is 6 months later than what we originally had. But the RBA understands how that works, and that's why they and we use measures like the trimmed mean that abstract from those big movements to get a good sense of the underlying trend in inflation and what the near-term momentum in inflation is. That's why we have those kinds of measures.
Luci, you've written a detailed note concerning the risks to the government's budget projections. Is the Treasurer striking too optimistic a tone about the economic outlook?
Well, our budget analysis last night did highlight how much what's called the parameter variations, the world just turning out a bit different than what you thought a year ago, has added to the budget bottom line and enabled some of the spending measures that were announced last night. But that's often the case. There's, for example, they have quite conservative estimations around things like commodity prices and therefore corporate tax revenue from the profits of miners. One area where we will be watching to see who's right about the labour market is the unemployment rate. Both the RBA and Treasury have got the unemployment rate through the next few years being flat at around 4.25%. Whereas we think it might get up to 4.5%. That's enough to make a reasonable difference to both the revenue and spending projections in the budget. That's why these parameter variations can be so important.
A lot has already been said about government spending crowding out private investment. When do you see a real pickup in the recovery of the private sector?
We do absolutely expect the private sector demand growth to start picking up over the course of this year. Part of the reason for that is because a lot of the squeeze was on the consumer. Households had been squeezed by high inflation and by the steadily rising tax take. And as inflation's fallen and the stage 3 tax cuts came into effect, real incomes have risen. So people do have more purchasing power now. And so there is some influence on consumer spending because of that. And that's a large part of where we expect that to come from. And then once the consumer's spending, then you'll start seeing businesses lean into that and find reasons to keep investing. I think there are also just some other, really interesting industry-specific developments for some businesses. Anyone adjacent to defence is going to be able to capitalise on the new world of geopolitics. There are a number of other sort of positive developments in various industries. So it is the case right now, though, that the expansion in the care economy has squeezed out the rest of the labour market. It's more about the labour market than business investment. Even though the care economy, much of which is actually private sector employment in health, in childcare and aged care, that's accounted for more than 80% of the jobs growth over the past 2 years, even though that sector of the economy is only 27% of all the hours worked. That's got to end at some point. It is squeezing out other sectors at the moment, but we do expect that as the NDIS ramp-up matures and some of these spending initiatives wash through, that the growth in employment in that sector will ease off and there will be a bit more space for the rest of the labour market to grow.
When do you believe we can say the cost of living crisis is behind us?
Well, I think now that inflation has come back down into the RBA's target range, both on a trimmed mean and a headline basis, we should be able to say there's sort of no more to come from here. But there is that lingering issue that prices are now much higher. The share of household income going to tax is higher than it was a few years ago. And so there will still be people who are finding it a struggle even now. But is it crisis stations? I think we're close to saying that it isn't anymore.
Luci Ellis, thank you.
Thanks very much, Kirsten.